Thank you for joining us for coffee this morning during our December coffee break. For those of you joining us for the first time, Treasury Strategies conducts these 20-minute coffee breaks to keep you abreast of the hot topics and challenges in Treasury management. As a quick aside, everyone who's registered for this session will receive a copy of the presentation and a link to the recording in a day or two. And should you wish to ask questions during the presentation, you can do so in the question box in the bottom right-hand corner of your screen, and we'll handle these questions offline when the message is done. So grab your coffee and let's jump in. From our work here at Treasury Strategies with our corporate treasury groups, we hear a story all too often. Most of the banks provide us with the same general functionality. My role is becoming more strategic and I have more to do, but with less staff. If you, Mr. Bank, can show me how you can add value to my business and what I do, I'll work with you over those other banks. But to add value to my business, you'll need to show me that you understand my business, have expertise in treasury management, and how I manage my liquidity. On the flip side, as we talk to our bank clients, we hear that expectations of the treasury management business continue to grow, and competition is hot for a stable fee business. So without some sort of dramatic change, that kind of growth just isn't going to happen. Sales teams may be hitting their metrics, but it's not reflected in their overall performance of the business. So how do we ensure that we as sales can be as effective as possible as we work through this challenging market? Are we structured properly to even hit higher targets moving forward? And where do we need to invest properly to grow the business? Good morning, everyone. I'm Marika Christopher, a principal in Treasury Strategies Financial Service Practice, and my colleague Scott Musial, also a principal in our financial services practice, joins me this morning. So why is sales effectiveness so critical right now? Transaction banking leaders are being charged with two tasks: growing the business by double-digit figures and to do so in an extremely competitive environment. We've seen most banks focus on growing fees to diversify and stabilize their revenue base. They've also allocated more dollars to the treasury management business over the past few years, more so than prior years. Most of this investment has gone to enhancing the product set, fixing the operating model, and acquiring strong talent. Yet they're not seeing the return that they were expecting. So what can we say when we hear, where's the ROI? Well, to have the R, you need the I. Investing in the product set and the online channel is great, but without investment in our sales teams, we're not going to see the returns. Historically, banks didn't have to invest in sales teams. They would just hire the best talent and let them loose. But this model doesn't work anymore. The market is competitive, and there may be only so much great TM talent to go around. So what does this mean from a sales focus? There are four key areas that Treasury Strategies sees as critical forms of investment in the sales function to get it right. The first is getting more scientific about your wallet share and metrics. The second is scaling expertise across the organization. The third is aligning the sales coverage appropriately to meet our strategic objectives. And last, transforming the talent that you have into the talent you need to support those three items. We'll walk through best practices of each of these four areas from Treasury Strategies' extensive experience in this area. Scott?
Thanks, Marika. So fundamental to understanding this question, why you aren't meeting your goals, is actually making sure that your goals are properly calibrated to your business in the first place. If your goals as a business and the metrics that you're setting for sales folks don't consider the four questions on this slide in one way or another, it's probably pretty likely that you're not happy with your business performance, your sales performance, or both. These four questions are, what is our client's wallet? How much do they spend in total between all the banks and other providers that they use? How much do we have as a bank? More importantly, how much should we have? And finally, how much do we want? In other words, if you think about this question, before you start building a better mousetrap to fix sales and sales effectiveness, you need to make sure that there are first enough mice even out there to get, and that you want to catch the mice. Thinking about this question of, are my goals right or my metrics right, there are two main themes that we are seeing. The first is, are goals and metrics achievable given my bank's reach and traditional client base? getting back to these 4 questions on the slide, the right goals for your business are ultimately based on questions 1 and 3. What is my client's wallet? How much do they truly spend on treasury management, commercial card? How much deposits do they ultimately have? And how much should we have? The answers to these questions are complex, and they're based on multiple factors. It depends on the size of the client. It depends on the industry of the client. It can depend on your position as a bank, either in mature markets or in growth markets where you might not be well known. There are other competitive factors. Where are you priced? What are your products? It can also depend on risk appetite. Ultimately, what do you want to take in? Do you want to take in certain industries? Do you want to take in certain products? This is a very multifaceted question that you need to answer to really drive to, again, what are my clients spending and how much should I be getting of that? And even when you're able to answer that question and kind of decompose those factors and get to really well collaborated goals to your opportunity as your business today, that right answer may not actually be the right answer, because what the bank needs from the treasury management business may not actually align with what the treasury management business can get. So as you think about what you can get relative to what the bank needs from you or strategic objectives, you may need to consider if you're in the right markets in the first place. And these 4 questions really drive that. It really gives you a base understanding of which I have between my credit clients, between my existing treasury management clients. What can I get today with the products that I have and the things that I can do, and is that enough? You need to consider that. And if you have to go into new markets, ultimately you have to start asking bigger questions about, can I go into those markets? Do I have the product sets, the skills, the reach, and the scope to do so? The second piece of this puzzle, or maybe the other view, is, are my goal metrics actually aligned to what I want to do as a business or what the bank needs from the treasury management business? And this gets to some of the dissonance that Marika mentioned earlier in the intro. You may look at it, you may look at your goals as a treasury management business as a whole, you may not be meeting them, but you look around and maybe your salespeople are meeting their goals. So what's going on here? And there's a few factors that can get into it. There could be just a simple aggregation. Your goals may not really be set up to, in aggregate, result in what you need to do as a business. Far more often, we see something a little different. And this is really getting underneath, are the metrics you're setting up for the sales force incenting the right behaviors? And this is an issue that we see that where the devil is in the details. Because when we talk about sales effectiveness, sales can be extremely effective and sometimes to a detriment. And so if you've set up a metric or the law of unintended consequences come through, you may not be getting the results that you want. Maybe your target operating model is dependent on the fact that sales is really uncovering needs, they're collecting business requirements and documentation so you can actually properly set up the client. Maybe your metrics are really focused on new business sold. So what is the focus of your salespeople? It's getting new business, it's selling new deals, but it's not necessarily getting that revenue on the books. So that's a situation where, thinking through the details, you have a misalignment. You have sales folks bringing new deals in the bank, they're meeting their goals and they're happy, they're doing what they are being told to do, but your business isn't performing as it is. Getting even deeper into this question, it gets really complex given the regulatory environment. Deposits is the #1 item that you can think about, where if you're not setting up the right goals and training the sales force to really understand them, you can get yourself in a not great position. Think about just the underlying dynamic of LCR in terms of there are good deposits and bad deposits. And the good deposits are deposits that will stay at the bank and can't easily leave the bank in a time of crisis. Well, if as a bank you have aggressive deposit goals and you're incenting sales to go out and get new deposits, your good salespeople are going to get them, and they can probably get them quickly. But if you really think about it, those deposits that they can get tomorrow in 30 days are not actually the deposits that you may need as a bank under LCR. So that's another example how really thinking through metrics and the behaviors you're setting up are aligned to what you need. And finally, when we think about goals and metrics again, maybe there's a question around why bankers aren't meeting them consistently. Is it a performance issue or is it a metrics issue? Is there just a need for more accountability with performance? Or maybe there is a metrics issue. We see a lot of metrics not being realistic, as we mentioned before, but we also see some metric fatigue. Again, going back to the deposits being a prime example here, we work with sales forces that really struggle with maybe needing to grow deposits for one quarter and then having to run them off the next quarter. And ultimately, that gets them in a place where they might even though the metrics around deposits are really good, they kind of turn them off because there's a lot of noise. And ultimately, they want to keep their relationships, and they don't want to have to go back and forth with clients about whether or not they want this piece of business from them. That might be another factor. You might have a complex set of metrics that sales doesn't understand. It might be all over the place where it just seems like noise, and you can't get the right behaviors out of them that you want to. So what are the solutions to all these answers? Getting back to the 4 questions again, we really think that you need to align your goals with what you think you can get, or ask the questions about how you can get those goals if clients don't have them in the first place. We help our clients every day with our industry benchmarks, with our knowledge of the corporate market, and our data mining techniques. We help clients assess the business at a top level, looking at their overall treasury management spend versus their credit, just to understand, are they getting the spend from their credit clients they could? We do the same with loans and deposits. That gives you just a really good gut check of, am I getting what I should from my clients? And we can even take this down to another level. We have extensive industry benchmarks that can help us understand what a commercial industrial firm should be spending on certain products versus a healthcare firm. And you can use that for other ways. Getting back to the original question of what should I be getting? What's really out there? You can really assess the base of what should this client be spending, what are we getting, and is there a disconnect there? Or have I really maxed that out? Because that's a fundamental question. Really, have I gotten everything from my client base, or am I trying to get blood from a stone here? And finally, our industry expertise, our corporate practice, our inherent 360 view can help you unearth the needs of your clients. So when you're in that position where maybe your goals aren't aligned to what you can get, how can you change that? Well, that's where you need to bring in segment strategies, go-to-market strategies, and roadmaps to really understand, do I have the product sets, do I have the right positioning statements to really enable sales to go out there and get it? So getting back to the original question that we've posed, the first step to improving sales effectiveness is really vetting and challenging the numbers that may or may not suggest that sales is being effective in the first place. Going on to our next point, scaling expertise. It's a typical challenge of any sales organization in any industry. How do I take what my best people do, translate that across a whole organization? We've all seen the salespeople that just get it and can sell a ketchup popsicle to a lady in white gloves, and all you need to do is set them loose and get it done. And we've seen the treasury management industry has really enjoyed what we call people-based success during what has been a massive period of growth in the 1990s and the 2000s. But as Marika mentioned, we think as a market, as an industry, we're at an inflection point where strategies that rely on bringing the best people and just setting them loose may not be good enough anymore. We see that the market has shifted. It's become more competitive and more complicated. Winning share is a zero-sum game. You're taking something away from a competitor, and that means you're going to have to work harder. And there's also a mix of strategic and technical. You're going to have to meet the strategic drivers of your buyers as well as answer their very technical questions. So how do you help sales answer those? You need to set up skills and knowledge. You need to understand what sales should have versus what can be centralized through training, through assets, et cetera. And you need to understand, do you have the right tools? What are the tools? Do they need industry briefs? Do they need working capital calculators? And finally, you need to understand, Is your organization set up to scale expertise? You know, you might have bits and pieces across the organization, but maybe you need more coordination. Maybe you need a whole organization focused on this because it is disparate and your current divisions can't handle it. Slipping sales effectiveness is probably an indicator that the bar has been raised, not that effectiveness has gone down. The industry has changed, and the banks that go from the little tree of people-based success to the big tree on the slide of scalable competencies and assets will be the winners in the end game.
So at this point, we've defined and prioritized the wallet. We've determined how to scale expertise from our top talent and get those competencies scaled across the organization through tools and training and other support for our sales staff. But what about the sales organization coverage model and how that's structured? We get the question all the time, how many salespeople are the right number? What support staff do we need? What are their roles and how do they interact with each other? And how do we best distribute our team and coordinate between them? We often hear from our bank clients, we really want the commercial RMs to work hand in hand with the treasury management sales officers to grow the fee business. Well, there's a couple issues with this kind of statement. One, as Scott walked through, depending on what kind of market and what type of prospect you're going after, you may not have the RM and the treasury management sales officer partner up. Two, what does it really mean to have them work hand in hand? Does credit continue to lead and TM follow where there's an opportunity? Does the treasury management sales officer lead? Do they call jointly to review? We can walk through a couple examples. As Scott mentioned, perhaps you want to grow deposits based on some LCR compliance. And so you're looking to grow deposits from a non-credit prospect base. Do you cover with your traditional RMs? Do they have the right knowledge and skill set to know how to ask for deposits and structure a complex deposit solution? Or do you need to create a whole new deposit team to cover that side of the market? What if you're selling into a really tech-heavy industry? Do you need technical experts to go out on calls with your relationship managers or your treasury management sales officers to ensure you have the right coverage during the conversation? If you're going to grow fees in a new market, in a new industry, do you need to align differently based on how they like to be approached? Ultimately, using your wallet share analysis and determining where you want to take the business will help you guide the number of staff, the coverage, and the relationship between the team members. These are the kind of coverage model questions that should be asked and answered, and Treasury Strategies can help with that. Finally, we get to transforming the talent. We hear all the time that sales teams just aren't able to get to selling because they're too busy doing other types of work. But what we often find is that these other activities are inherently part of the sales role, but they don't make it into the role description or how the sales staff is getting paid. Best practice is to determine whether we explicitly want to make quote-unquote non-sales activities part of the role and ensure that the role description and the compensation reflect that decision. If we don't want it to be part of the role, then a reconfiguration of the operating model is required and a redefinition of the roles and responsibilities under the sales organization. The second best practice related to transforming sales talent is to ensure that the skill sets are aligned to where we've determined we will grow the business. Questions like, what skills do our sales teams need to achieve our specific goals? How do we find the right individuals to deliver on that goal? And how do we train them to deliver? Are there certain skill sets that we're missing in our team today that we can coach or train? At times, sales skill sets aren't aligned to where you want to grow the business. The type of salesperson that you need to grow the business in a brand new market versus your home market will be different. If you're going outside the commercial bank relationship for new business, you really need to think about new roles, coordination, and partnership with the commercial RM group. When these stars align, you'll be sure to have an outstanding performance from your sales team. Over the past 20 minutes, we've walked through the 4 key areas of getting sales right: getting more scientific about wallet share, scaling expertise across the organization, aligning sales coverage appropriately to meet your strategic objectives, and transforming the talent you have into the talent you need. We thank you again for your attendance at Treasury Strategies Coffee Break, and our next coffee break will be in February 2016. Please watch for an invitation to participate in our TM organizational benchmarking study and wish you all happy holidays and a happy, healthy New Year 2016.